Hello traders, this is Ala Peters, founder of Fibonacci Trading Institute and Alpha Fibonacci Method. In this webinar, I will be showing how you can benefit from Fibonacci strategies and utilizing Fibonacci on any instrument, any time frame you will choose to trade. So please prepare the questions about the instrument of your choice and time frame of your choice. But first remember, everything I do in this webinar, I do for demonstration of the method. I do to educate you about Fibonacci. I'm not a financial advisor. I teach you how to use Fibonacci and how to trade Fibonacci strategies. And this is what webinar is all about. In 2008, when I witnessed market collapsing, I started questioning everything about the markets. I started recognizing very clearly that trading on fundamentals and trading on earnings does not work. That there is a lot more to the story, as I witnessed very clearly. That no matter what instrument, no matter what chart I am looking at, it all the same, as price keeps repeating exact same formations. This was a stock I was holding in 2008, Chesapeake Energy, one of the most powerful energy companies in US. Chesapeake Energy at that time had excellent earnings, had stunning fundamentals. By the time 2009 came, I developed first Fibonacci strategy, utilizing this Fibonacci tool you see throughout the webinar that has extremely high accuracy that show you when price comes to reversal zone, no matter what the fundamentals, what the earnings are, price will collapse completely 80+% of the time, which you will see throughout webinar, how to use Fibonacci levels for your trade entries, for your trade targets on any instrument, any time frame, any platform you choose to trade. If you cannot see my slides, please log out and log back in again. It is coming from your end. It is absolutely crucial that you adjust the screen on your computer. So, take a look at what played out in the markets, in the trading room today and this week. This is S&P E-mini future chart from the trading room that had been present in the trading room since last Friday. This is Fibonacci reversal zone, not the place to ever short near. If you choose to short near this level, your success rate less than 20%. This is ultimate Fibonacci resistance that shows the weakness of the buyers. These Fibonacci levels remained in the trading room the entire week. Anyone surprised where price reversed after FOMC announcement? Levels identified days in advance had been present on day trading charts as key targets, as key support and key resistance levels days in advance. If I convert this chart to 5-minute, take a look. Accuracy remains the same. Buy at trend inception when rules are met. Never ever enter into Fibonacci resistance. Monitor for short. And if I convert this chart going back to the entire week, this is 5-minute chart in the last 3 days. If I convert this chart to 15-minute, accuracy remains the same. It is your choice what you choose to trade. Time and time again, identical Fibonacci levels, identical Fibonacci patterns, identical price action strategy. And that's what played out on 1 minute chart this morning, when price collapsed completely from decision point to 15 minutes after the open. If I will bring out to you this chart, you would not have a clue what this is. Take a look. This is price collapsing completely, just like 1 minute chart had done in the trading room this morning. What is the difference? This is gold. This is your investment chart. This is your investment decisions. Identical structure as 1 minute chart today. Identical structure as any instrument, any time frame, any platform you choose to trade. It's absolutely your choice. And this is the core of the method. And this is what I developed by the time 2009 came. This proprietary Fibonacci tool you can install on any platform you choose to trade. Trade from Fibonacci levels, never ever into Fibonacci levels. And when price comes to reversal zone, you monitoring for trend reversal. And when price comes to this bright pink line, you monitor for the end of the minor trend. As you saw, multiple examples from 115 to 60 to any chart you choose to trade. As you see right now in live markets, exact same Fibonacci level in a play on Netflix right now. Why in the world is Netflix frozen at this Fibonacci support? The only reason is market is flawless Fibonacci puzzle. This is the end of the minor trend, just like on S&P 1, 5, 15, 60-minute chart. Just like on any chart you choose to trade. Choice is yours. Why in the world did Netflix collapse from reversal zone when earnings are so spectacular? Significantly, $100. Because Fibonacci said so. No other reason whatsoever. It's identical formula, time and time again. Only Fibonacci will give you ultimate accuracy, no matter what you choose to trade. No matter if it's 1 minute, 5 minutes, no matter if it's daily, weekly, monthly, price action patterns remain the same. So, let's do an interesting test. This is what I recognized in 2008. Very, very simple. This is what I started with, questioning the markets from. What chart is this, traders? Anyone wants to tell me? Please take a guess. Anyone wants to take a guess what chart this is? Anyone else wants to take a guess what chart this is? Excellent, because I've shown the drop before, so you identifying this correctly. This is ES. So let me ask you next question. What chart is this? SES S&P E-mini future is the most powerful, the most popular day trading instrument. in US. So, you know what this looks like. What about this? What chart is this? Let's take more guesses. Pretty please. Anyone wants to take a guess? It is not Netflix, Clint. Any other guesses, please? This chart looks identical to S&P E-mini future with a symbol on NinjaTrader platform. Just a reminder to those of you who do not know. Every single platform has a different symbol for futures. S&P E-mini future was correct previously. This chart looks exactly the same as S&P E-mini future. It is not Netflix. What is it, please? Anyone wants to take a guess? Clint, you're the only brave one. Pretty please? It is not ES. It is not NQ. It's all the same. It is, in fact, oil. This is what I recognized very, very clearly in '08. It doesn't matter what I'm looking at. Price action keeps repeating exact same patterns. I removed all the indicators from my charts and I went to work, seeing very, very clearly that exact same patterns keep repeating itself. I recognized very, very clearly that if strategy works, it should work on any instrument, any time frame, any platform, as long as liquidity is present. I recognized very, very clearly that day trading charts have a lot more noise than long-term charts, but patterns remain the same. This month I celebrate 10 years of work with pure price and Fibonacci. And what you witness throughout the webinar is how you can benefit from ultimate Fibonacci accuracy on any instrument, any time frame, any platform you choose to trade. Here's what played out in the trading room this morning, all recorded on live video on oil during oil news. Everyone seeing this chart? This chart been present in the trading room for weeks. This is your day trading chart. This is early September. Oil collapsing, just like you saw where Netflix is right now at the end of the minor trend. Just like you saw how S&P collapsed from at the time of FOMC release until ultimate trend inception, September 15th. This entire week I warned everyone, this is not the place to buy oil unless oil will retrace to this support. Take a look on this chart next, and remember, those of you who trade oil, horrific bearish news did not mean a thing. Oil keeps bouncing from this support identified weeks in advance. If I convert this chart to 5 minutes, take a look what oil had done. Shock or not. This is when we close the room. All recorded on live video. Time and time again. So, ultimate reminder. If trading on the news worked, every single person on the planet would be Bill Gates. The only thing that works is price action and Fibonacci. Fibonacci level present in front of you, do not short. Simple. Rules are met, take a trade. No matter what chart you traded on oil this morning, no matter if it's 5, no matter if it's 15, it's all the same. Overextended bullish rally this entire week shown you how much pain oil is. And here's another reminder on what played out on this chart. Take a look. These charts are twins. What is the difference? This is oil weekly. This chart had been present in the trading room for years with ultimate trend inception. Browse YouTube channel in 2016. Here is a reminder. Here is oil from the trading room in 2016. Ultimate trend inception. Ultimate Fibonacci support. Not the place to short. And if I show you this chart, do you know what this is? Why would that matter? Anyone wants to take a guess? What is this? It's all the same. Price keeps repeating exact same patterns. Let's do another test. Anyone wants to take a guess what this is? Why in the world did price collapse? Simple. Fibonacci said so. Price came to reversal zone and collapsed completely from ultimate Fibonacci resistance until ultimate Fibonacci support. Do not short. And price reminded you, just like on oil, to the downside. Bright green line is absolutely crucial as resistance. Ladies and gentlemen, no one wants to take a guess. These are bonds weekly. Identical structure. Twin charts. If you take a look on any chart you choose to trade, why in the world block your vision with indicators? Go to the source and you will be amazed how much you will see. Price keeps doing exact same dance from Fibonacci reversal zone until key Fibonacci resistance, with decision point 2 being key trend target on your trade. That reminds you, never acquire position outside of decision point 2. It will never work. Price will collapse completely 70+% of the time. Price collapses completely from reversal zone 80+% of the time. This is a chart that has been present in the trading room for years. Here is a reminder of gold and what played out on gold years prior. This is gold. Do you remember gold at 1128? Do you see subsequent levels in front of you at 1300? Are you surprised that gold had done exactly that? Shock or not, as expected. From ultimate trend inception until key target. This is where you exit your position, scaling out carefully until next stage. Gold never broke through this level. Right now, gold is frozen in massive correction at trend exhaustion levels. Gold is oversold. However, this Fibonacci resistance blocking bullish rally. And that's the key. And this is exact same to information from the trading room today. This is exact same thing that happened on S&P 1-minute chart when price collapsed 15 minutes after market open This is exact same thing on S&P 5-minute chart when price collapsed from decision point 2, just like gold. And when price reversed from reversal zone until this key support, ultimate target, ultimate resistance became key support, not the place to short. And if I show you what played out currently on euro, it's exact same dance. This is euro now, hanging for dear life in front of you today at decision point 2. Price comes to reversal zone, monitor for short. Never acquire long position into. Overextended sell-off, monitor for long. Euro been frozen at decision point 2 for months and months and months. How long will this remain? None of us know. But this is not the place to enter the position. Trade from Fibonacci levels, not into Fibonacci levels. It's all the same. And that's the power of Fibonacci levels, Fibonacci strategies on any chart you choose to trade. 10 years of work with price action and Fibonacci is what you see in front of you. Market is flawless Fibonacci puzzle. It's that simple. Using anything else is simply afterthought. Oil overbought. Taking oil a year to break through the end of the minor trend. Bright pink line is the end of the minor trend. Never ever ever enter into. If buyers are weak, market will collapse completely. Again, this is exact same thing that played out on S&P after FOMC. Level present in the trading room for days. I will give you link to YouTube channel where you can see all of these levels posted days in advance. Your respect for Fibonacci, your knowledge of pure price will determine your success. It is that simple. Nothing else matters. Here is number of other examples. This bright pink line is the end of the minor trend. In order for the trend to continue, this bright pink line must be broken. Knowledgeable trader price at key support and adjust his stop outside of break-even. Unless trader chooses to trade against the trend, that would be the only excuse to use this as a complete target. Here's the exact same example on multiple other instruments. Here is Apple. Looks familiar? Took Apple months to break through this level. The end of the minor trend is not the place to buy. And as I said before, Apple earnings. This is what played out as Apple staged bullish rally from key Fibonacci support. It's a stepping stone. And this is where Apple is today. Everyone clear on this? Buy at support, not into resistance. Prior to the earnings in April-May, this was a place to buy Apple. The end of the minor trend is broken. Apple headed to decision point 2. Key resistance became key support. Right now, Apple in a lot of pain. Fibonacci reversal zone identified months in advance in a play in front of you right now. Apple in a lot of pain. This support is holding the key on Apple. This support is crucial. If this support is out, Apple in trouble. Buying at reversal zone, not a good and wise thing to do. What is the best case scenario? Ultimate pain and ultimate torture. This is where you're scaling out of position, not acquiring position. And no surprise, what you see in front of you. It was all identified in advance. And that's exact same formula every day, every time. Every price action pattern remains the same. Go to the source. Nothing else matters. You master price action. What is the difference? Risk management and trader psychology. I worked with traders from beginner to hedge fund traders since 2011. Every single trader trades different instrument. Every single trader has different preference for the instrument time frame and account size that trader trades. Fibonacci tool remains the same. Fibonacci strategies start with this. Fibonacci golden ratio was discovered by Leonardo Pisano in 13th century. This special mathematical sequence creates repetitive spirals and triangles which are present in nature. These exact same patterns are present in financial markets. Fibonacci sequence starts from 0. And if you start adding the numbers starting from 0, you will create Fibonacci golden ratios, which is present in everything that surrounds us, which is what forms the markets. Market is Fibonacci puzzle. Price action and Fibonacci form repetitive price action patterns, which can be capitalized upon in any market for trade entries and trade targets. Fibonacci method can be traded in both day trading and investment position, as well as stocks, futures, Forex, ETFs, and options. Anything that has price has Fibonacci and price action patterns. Here is a reminder of the importance of respecting Fibonacci reversal zone. Here's one of the favorite screenshots from the trading room, Euro 2014. When Euro was in 2014 at 3900, this was a place where trader monitors for short. This is exact same identical strategy you see time and time again on any instrument you choose to trade. This is what's playing out right now on Tesla. Charts are twins. Tesla been in a lot of pain because it reached reversal zone in 2017. Tesla been respecting key Fibonacci support as sellers been weak. Just like on S&P today, where buyers are weak. On sellers remain on Tesla pretty darn weak. Identical formula applies. Knowledgeable trader understands price comes to reversal zone. You exit your position or you scale out of your position. You never acquire long. no matter what you trade. Price reverses completely 80+% of the time. Doesn't matter if it's 1 minute, 3 minute, 5 minute range charts. It doesn't matter if it's Facebook. Stunning earnings. Why in the world did Facebook collapse? It doesn't matter if it's 1 minute chart on S&P. It's all the same. That's the dance price does every time. That's the reason I named these levels reversal zone. Why in the world is Amazon collapsing when earnings are so fantastic? Because Fibonacci said so. Just like Facebook, just like Tesla, just like Euro. No surprise whatsoever, none. Just like oil does, time and time again, no matter what you trade. Here's a reminder of oil collapsing the entire month of January, despite very bullish news, as price reaches reversal zone at 64. This is the same identical formula across the board on all the instruments you trade. Why not go to the source and master price and master Fibonacci? Choice is yours. Do you want to trade options? Do you want to trade stocks? Do you want to trade Forex? Do you want to trade Tesla? Price action patterns remain the same. Risk management is the only difference. Fibonacci is the only highly accurate predictive mathematical sequence to identify profit targets on any instrument. If you choose to trade against the trend, it is essential to respect this level as the end of the minor trend. Take a look. Euro been frozen at this key support for months. This is a channel on Euro for 5 months this year. Do not short into Fibonacci support. Again, exact same resistance was in play at the time of FOMC release on any instrument, any chart you traded on indexes today, across the board. Never ever disrespect this level. The end of the minor trend. Respect it and present. Never ever disrespect this if you trade in Google. And remember what played out on S&P in 2016. What do you see in front of you? Do you see what happens after 2200? You see 2300. You see 2500 next. How many months, how many years did it take S&P to break through this level? You see exact same ultimate trend inception as on day trading chart today. You see exact same Fibonacci resistance as on day trading chart today. This is exact same thing S&P had done, collapsing from the end of the minor trend, time and time again. Before the trend becomes major, before the trend moves higher, this is key resistance. Do not enter into. If you're trading long term, it is absolutely crucial level. It had taken S&P 6 months to break through this level. No surprise. Do not enter near by its support. And as you've seen in previous screenshot, market skyrocketed. Trend became major. As present in the room since years before 2016. And again, it's identical dance, what played out today at FOMC. And if I convert this chart to 5 minutes, what would you see? Identical formula. Do not enter. Buy at trend inception. And if I use exact same formula, 15 minutes, no surprise. Just like S&P weekly. What is the difference? The only difference, if you're trading long term, if you would like to hold position 5 minutes, 5 hours, 5 days, or 5 weeks, 5 months, 5 years. If you want to do them all, why not? Choice is yours. Identical Fibonacci levels. Identical Fibonacci tool applies. No surprise. Only Fibonacci can identify exits far in advance of current price. On day trading charts, minutes, hours, days in advance. On long-term charts, days, weeks, months and years in advance. Here's a chart from 2016 monthly. What do you see on this chart? Do you remember how crucial decision point 2 is? It is key Fibonacci target if you are trading with trend. This bright green line had been the most crucial level for years, from 2014 all the way through 2016, when market danced in ultimate correction. This support is respected. Price reached 2200 by the end of 2016. 2500, 2017, 2800, 2018. No indicator on the planet can do that. Only Fibonacci can. Every single indicator on the planet is delayed. Every single indicator on the planet will never give you ultimate accuracy. Only Fibonacci will. Fibonacci retracement levels are the key to the method. Fibonacci retracements cannot be traded without a strict set of rules. Fibonacci retracements must be used with strict set of rules only. This will give trader high accuracy trade targets using exact same set of rules for day and position trading, any instrument, any platform, any time frame. Fibonacci Trading Institute utilizes our own proprietary Fibonacci tool and strategies. If you are trading with indicators, you never master the price. You're blocking and not mastering what indicators developed after. Indicators are delayed and give you all the signals after the fact. Fibonacci is not another indicator. It is natural predictive tool and mathematical sequence that can be used on any platform. Fibonacci on the platform found under tools, never under indicators. Very big difference. Never confuse the two. The most efficient and most profitable market entries occur at trend inception. When price comes to reversal zone, monitor for long. Again, this is a chart from the trading room where you can witness method in live markets. When price comes to reversal zone this entire week, at reversal zone, our bias remains firmly bullish. This is reversal zone since Friday close. This is what price had done, staging very weak pullbacks and reminding you, when price comes to reversal zone, monitor for reversal. Rules are met, You're buying at ultimate trend inception. This is Monday. Bullish rally starts and ends at this Fibonacci resistance. This is the market on Tuesday. Reached key Fibonacci resistance and market sold off. And this is FOMC. Ultimate reminder. Never buy into this level, no matter what you trade. No matter if it's 1, 2, 3, 4, 5, 6, 7, any chart, Fibonacci levels remain the same. Identify days in advance. Present in the room since Monday. Simple. That's a market trader. And that's what price does every time on any instrument. Rules are met. Take a trade for ultimate trend inception. And this is what separates knowledge from being a follower. Google this year collapsed from key Fibonacci resistance, key Fibonacci target, despite stunning earnings the entire year. In the course you learn that this is your key trend target, scaling out only after Google frozen in massive correction. No surprise, sellers are weak. Chart present in the room for years. And if I take a look on exact same chart, except on S&P, it's all the same. 1 minute chart, 5-minute chart, ultimate trend inception on very different day. And this is exact same formula on oil from the trading room in 2015. Very bullish news. Knowledgeable trader monitoring for shorts. Simple. Do not enter into reversal zone, no matter how bullish the news is. Rules are met. Take a trade. And that's what knowledgeable trader does at ultimate trend inception at reversal zone. And this is pound at the start of 2018. Not the place to buy. And this is pound dollar at trend inception in 2014. Monitor for long. And if you're aware about the events on Wall Street, in 2015-2016, you know extremely well what played out on Valiant. And that's the key. No surprise. What you choose to trade, absolutely up to you. Ultimate accuracy on any instrument and any time frame. Only with Fibonacci. Nothing else matters. And here's a basic principle, and here's what I teach in Fibonacci Mastery course. Major trend consists of 5 Fibonacci waves. Knowledgeable trader acquires position at trend inception, at reversal zone if trend is major, or decision point 1 if trend is minor. As again, plenty of short opportunities on ES, S&P E-mini future when price came to the end of the minor trend. Monitor for short. All the same, any day, any time. When price forms counter trend wave 2, do not touch the markets, do not trade. Walk away from the screen, walk away from the chart. Trading against the trend produces best case scenario pain and torture. Smart thing to do. Trade with trend only. Wait for trend formation at wave 3. Do not ever acquire position at the end of wave 3. It will never work. Chances of success less than 20%. This is the example, and this is the importance of what's happening right now. Euro, not the place to buy. Monitor for reversal. Identical formula applies. Do not buy this late. Will never work. Time and time again. No matter what you trade. Price comes this high. Market overbought. Monitor for short. Trading bullish rally, trading market conditions play out less than 20% of the time. We're dealing with trending markets right now, traders, which makes the markets very dangerous. Being prepared when institutions will start closing positions is the key. This is exact same identical Fibonacci structure on Nasdaq. 5-wave major trend. Nasdaq reversed as expected. Every time I go to hedge fund conventions in event, it never ceases to amaze me how hedge funds trade. One of the most powerful hedge funds on the planet, Renaissance Technology Fund. I will highly encourage you to please Google and see what founder James Simmons, who is a mathematician, using in his fund. Highly encourage you, please review. So, in summary, what you witnessed throughout the webinar is how you can benefit from pure price and Fibonacci, using Fibonacci as key support, key resistance, and ultimate trade targets on any instrument, any platform, any time frame you choose to trade, on future stocks, options, Forex, and ETFs. I've been teaching Proprietary Fibonacci Method I developed in 2008 to traders from beginner to hedge fund traders since 2011. I highly encourage you to review and listen to the students on website. Let me show you in just a second. So day traders, option traders, position traders trade proprietary Fibonacci method from small account to institutional level account. Listen to graduates of the course sharing their experience on the website, where you learn proprietary Fibonacci strategies with entry, stops, and targets. You learn how to identify target, support, and resistance levels in advance for day trading or investing. So, if you come to the website and you click under Learn, here's the information about the course. All classes are live just like this webinar. I love teaching. I love working with my students. Group course 8 weeks, private mentoring 16 weeks. I am with students on average 4-5 days per week, Monday through Thursday, with live guided trading and key Fibonacci classes, Monday and Friday. If I work with you in private mentoring 16 weeks can be extended to 1 year if you need to take time off for any reason. We meet with you one-on-one in addition to all group classes. Trading psychology is the core of the method. When I work with you in private mentoring, I can concentrate on the instrument of your choice and setting up Ninja Trader for you. We work via Skype and TeamViewer. We work on your execution. Best part of website always, what students have to say about course. As traders from beginner to hedge fund manager in US and globally trading the method. So please review the information on the website. view videos on YouTube channel, see reviews on Facebook, and never hesitate to contact me. info@fibinstitute.com or 925-257-4298. I look forward to your questions, traders.